This is a quick start guide for Excel Skills weekly cash flow projection template. This unique template enables users to create a weekly cash flow projections for any user-defined 52-week period. Let's start with the template assumptions. So you can set the business name, which is used as a heading on all the sheets, and then you can set a start date, which determines the reporting periods which are included in the template. You can also set the number of weeks that need to be included in each of the quarters, and the titles of these quarters must add up to 52 weeks. So quarter 4 it contains a formula which calculates the remaining weeks based on the first 3 weeks quantities. Okay, then the next section is for the income statement, which basically just means that all the income statement input values are set on the Inkscape sheet. Let's go there. Okay, so all the rows that require user input are indicated with yellow highlighted in column A. You can see the template includes 52 weeks with quarterly totals and then an annual total at the end. Totals are calculated automatically. Okay, so the code in column A, the first 2 characters of the character refer to the sales tax percentage, which is included in the sales tax calculations, and the second 2 characters refer to the trigators or creditors calculations. So if you have a C1, the appropriate amounts are included in trigators or creditors calculations, and if it's C0, then it says cash, income, or expense, and not included in trigators or creditors calculations. So the top section, which is calculating your turnover, cost of sales, gross profit, and gross profit percentage, your turnover amounts are entered and your gross profit percentages are entered, then your cost of sales and your gross profit values are calculated automatically. We've only included 2 items. You can increase the number of items by inserting the required number of rows in each section, and where it's calculated, like the cost of sales and gross profit values, just copy the formulas from one of the existing lines. And for user input, you just add the user input. You can also change the descriptions. You can see where it's service-based, we've used 100%. So your gross profit percentage on service-based businesses will always be 100%. And you can hide your cost of sales and gross profit calculations if you only have service-based income. So other income needs to be entered. And then operating expenses, you can review the descriptions in column B, change it based on your business requirements, and then you can add additional items if you want to by inserting the required number of additional rows and then copying your quarterly and annual titles and entering the appropriate values. Staff costs similarly also user input. Depreciation and amortization is also user input columns. Interest is calculated on the loans and leases amortization tables, which will get you. Taxation is calculated based on the income tax percentage that's specified on the assumption sheet. Dividends also calculated based on the assumptions on the assumption sheet, and then all your row totals are automatically calculated. Any row which doesn't contain yellow highlighting means that it's automatically calculated. So let's go back to the assumption sheet. So the next section on the assumption sheet covers a few balance sheet items, but it's really their cash flow statement input that's covered here. So let's go to the cash flow sheet. Again, all rows that require user input are indicated in yellow. Where the code is green, it indicates that a positive value needs to be entered, and where the code is red, it means that negative values need to be entered. So all of these items relate to balance sheet calculations. And you're basically going to enter the movements in these balance sheet items on the cash flow statement. And that's going to be used in the balance sheet calculations. You can also see proceeds from loans here, which are included on the amortization tables. So let's go back to the assumption sheet. The next sections relate to other balance sheet calculations, which are not calculated by way of adding movements to the cash flow statement. So you have inventory days, debtors days, and creditors days, and are used for the calculation of trades, receivables, and payables, and inventory. Then you have the payroll accrual. The payroll accrual is calculated as a percentage of staff costs, and then you can set your payment frequency in months and the first payment month, as well as your current or subsequent selection. So current means that the payment amount is calculated up to the current month, and subsequent means that the payment amount is calculated up to the end of the preceding month. You can also set a payment day that will, in the terms of a weekly cash flow projection, just set where to include, on what day to include these your payroll payments. Sales tax works similarly as the payroll setup. You just have a stacked up of rates to start off with, and then you have payment frequency in months, first payment month, current or subsequent, and payment day. Income tax, also you set the income tax percentage and you include a assessed loss carryover if applicable, but then you can set payment frequency in months, first payment month, a current or subsequent, and a payment day. Okay, so the next section relates to the loan terms. The loan amounts are determined based on your balance sheet opening balances and then also the new proceeds from loans, which are included on the cash flow statement. But the loan terms are set here. So there's 3 different loan terms and 1 for leases. That doesn't mean you can only include 4 lines in the linklet. You can include as many lines as you want with the same loan terms in each of these amortization tables. So as long as the loan terms are the same, you can use the same amortization table. There's a repayment day that's set here as well, which determines in which week to include your repayments. So your balance sheet opening balances, this is like a trial balance at the end of the month preceding the first month or week included in the template. So you enter assets as positive values, liabilities and equity as negative values, and all your balances must balance to a total of 0, like any charbirds. The last section is for dividends, so you can set your dividend percentage as a percentage of make profit. You include a payment frequency, a first payment month, and then select cash or next for determining whether to include the payment in the same period or in a subsequent period. You can also set the payment day. And that's it. So we've covered the income statement and cash flow statement. In terms of the balance sheet, it's fully automated. All the calculations are based on the calculation assumptions that we just covered, and there's no user input required on this sheet. In the 4 amortization tables, as we discussed, the opening balance comes from the balance sheet opening balances, and then your additional loans are the proceeds from loans that are entered on the cash flow statement. So your interest charges and capital repayments are determined here. The interest charges included on the income statement and the capital repayments on the cash flow statement. The entire sheet is automated. This is assigned for all 3 loan amortization tables and the lease amortization table. And that's basically it. You can refer to our detailed instruction sheet where we cover every aspect of the template, and you can also refer to the support section of our YouTube channel where we upload videos based on user feedback.